Wednesday, November 13th, you're looking at the 3-minute chart of the S&P E-mini, and prices traded well within the calculated trading zone. Support down at 6,000, resistance up at 6,036. So where was the trade? Well, prices opened up just about at equilibrium at the previous close at 60.14. So where was the trade? If prices traded at or opened at the previous day's close, there certainly wasn't a gap trade. So where was the trade? There are only 6 trade setups, and you see them over here, right in this chart. Gap, support and resistance, trend, time and price, momentum, and candlestick. And so where was the trade? Well, it certainly wasn't at the open, right over here, because the gap was not there. There was no gap today. And so prices traded down to the calculated support down at 6,000. But where was the trade? Well, if you knew these 6 trade setups and you had patience, the trade was obvious. Not so much, though, on the 3-minute chart, although we have a confirmation of the calculated trading zone range. But let's look at the 5-minute chart. Now, on the 5-minute chart, we see something a little more easily spotted, and that's this hammer right over here. And the reason that I'm calling your attention to the 5-minute chart, you see this hammer at the bottom of a decline? Well, a hammer at the bottom of the decline can mean a reversal. On the 3-minute chart, we don't see it so much because although it is a hammer, the body is just about the same length as the shadow. And that's not an indication, or a really good indication, of a hammer at the bottom of a decline. A really good indication of a hammer at the bottom of a decline is where the shadow is 3 times longer than the real body. And so looking at the 5-minute chart, let me expand this for you. And again, look at this candle, all right? The shadow is more than 3 times the length of the real body. And this is a dead giveaway that prices were reversing to the upside. So what did that mean to traders who know to look for the candlestick trade? That meant that trading can begin with a buy at around 6,004, 6,005, and trade up to the calculated resistance at 6,035, or 6,034, a 30-point gain. $1,500 if you're trading the E-mini, $150 on the micro E-mini, and with a very good indication of where to get on. The candlestick, right? The candlestick with the shadow 3 times the length of the real body. So that's my video for today, Marv Eisen of Timeless Dollar Trading Academy. And of course, that's also confirmed with the oversold stochastic, or just about oversold stochastic. So we have confirmation in the stochastics, and we have confirmation in the calculated trading zone. Trade safely, use lots of patience. Thanks so much for watching, and I'll see you in my next video. Marv Eisen for Timeless Dollar Trading Academy.